Welcome back, everybody, to another deep dive. And this time, we're going to be going through the Bank of East Asia's 2023 annual report.
Yeah, exciting times.
It is a hefty one.
Right.
Um, so, obviously, there's a lot to unpack here.
Lots to unpack.
We know you're interested in how they're navigating this kind of current economic landscape.
Yeah,
Especially with all this stuff happening in the mainland property sector.
absolutely.
So, we'll be kind of taking a look at the bank's performance
Yeah.
and looking at their business segments, some of their financial highlights,
Yeah,
and what they're doing to kind of boost shareholder value.
sounds good. I think, this is a really interesting report because it really shows how BEA is adapting and thriving in these challenging times.
Right.
They're not just sitting back. They're actively changing their strategies across their different businesses.
Yeah.
From Hong Kong to the mainland and beyond.
Absolutely. And speaking of those business segments,
Yeah,
why don't we start there?
sure.
The report really emphasizes their diverse approach. But how is each area contributing to that big picture?
Yeah. Well, it's not a one-size-fits-all approach. Their Hong Kong operations, which is a significant part of their business,
Right.
they faced a tough environment in 2023, but
Yeah, the report mentioned that they saw some improvement.
yeah.
But what was driving that?
So despite those challenges, they actually managed to increase their pre-tax profit by almost 10%.
Okay.
A big factor in this was the net interest margin.
Okay.
Now, for those who aren't familiar with that term,
Right.
it's basically the difference between the interest they earn on loans
Okay.
and what they pay out on deposits.
Got it.
So it's like their profit margin
Right.
on lending.
Yeah.
BEA saw this margin widen by a significant 62 basis points,
Wow.
meaning for every HK $100 million in loans, they earned an extra HK $620,000 in profit compared to the previous year.
Wow.
And this was fueled by those higher interbank rates
Okay.
we saw throughout 2023.
So they were able to capitalize on those rising rates.
Yeah, they took advantage.
Okay.
Right,
But the report also mentioned a dip in fee income
right.
due to what they call subdued market sentiment. Didn't that kind of counter their gains from those interest rates?
It did to an extent. Weaker market sentiment often makes people hesitant to invest,
Right.
leading to lower fees for banks.
Right.
However, BEA was proactive, and they actually saw strong growth in sales of private banking products and bank assurance,
Interesting.
which helped offset those losses.
Okay.
So it shows a little bit of a strategic shift towards wealth management services,
Right.
which tend to be less vulnerable
Yeah.
to market fluctuations.
That's interesting. So they weren't just sitting back and letting the market dictate their fate.
Exactly.
But did they have to compromise their efficiency
Yeah.
to achieve this?
That's a good question, because investing in new product areas and boosting sales can get expensive.
Right.
But that's what makes it really interesting. Even with those investments
Right.
in technology and sales, their operating expenses only went up by 2.1%, which is pretty minimal.
Yeah.
And that's mainly due to their smart digital transformation initiatives.
Right.
They're streamlining processes and becoming more cost-effective,
Right.
which is essential in this kind of environment.
Absolutely.
Yeah,
So technology is helping them become leaner and meaner.
exactly.
But even with all this positive news, the report also highlights kind of the elephant in the room,
Yeah.
those mainland property sector woes. How big of an impact did that have on BEA?
Well, it's a crucial point because the liquidity issues in the mainland property sector,
Right.
particularly those developers operating offshore, they definitely impacted BEA's lending business.
Okay.
And they had to increase provisions
Right.
in the second half of the year, setting aside more funds to cover potential losses
Oh.
from loans that might not be repaid.
Okay, so that's pretty tricky.
Yeah.
Do they address any strategies for dealing with this going forward?
Yeah, the report emphasizes their commitment to prudent asset management. So it suggests they're taking a very cautious and measured approach, working closely with clients to try and resolve these troubled loans.
Got it.
It's definitely something to keep an eye on, but they seem to be managing it quite proactively.
Okay, so their Hong Kong operations seem to be holding steady,
Yeah.
but they're definitely not immune to the broader economic winds.
Yeah.
Now, let's kind of zoom in on their retail banking segment.
Okay.
I'm curious how that performed in 2023.
Now, this is where we see some serious success.
Okay.
The retail banking segment thrived, with net profit shooting up by 44.6%
Yeah.
year on year.
44.6%.
It's a significant jump.
Yeah.
And it tells us a lot about their strategy.
That's massive. I'm guessing those higher interest rates we were discussing earlier
Yeah.
played a role here too.
Absolutely. Their net interest income saw a massive surge of 41.1%.
Wow.
Fueled by those higher rates combined with an increase in loan volume.
Okay.
So they're riding this favorable rate environment
Right.
to their advantage.
Interesting. So where was this loan growth coming from?
Mm.
Any specific areas?
It seems they're taking a balanced approach.
Okay.
The report shows both mortgage lending and credit card spending contributed to the growth in customer loan balances.
Okay.
So this diversification helps mitigate risk.
Right.
It indicates they're not overly reliant on a single product line.
Okay.
And on top of that, their retail deposits grew by 4.5%,
Okay.
further solidifying their financial foundation.
So they're seeing growth on both sides of the balance sheet.
Exactly.
That's a good sign.
Yeah.
But did that weak market sentiment that we were talking about earlier also impact their retail banking segment?
Yeah, it did affect their customer investment activity.
Yeah.
People were a bit hesitant to jump into the market,
Right.
which impacted their fee income.
Right.
However, remember their strength in bank assurance.
Yeah.
That continued to be a key factor here.
Okay.
Annualized new premiums surged by a whopping 80.9%,
Oh.
which cushioned the blow from that market downturn.
So despite challenges, they adapted quickly.
Yeah,
And that diversification strategy seems to be paying off.
it is.
Before we move on, I'd like to touch on their SME focus.
Yeah.
The report briefly mentioned some restructuring in that area. What stood out to you?
What I thought was really fascinating was they restructured their enterprise banking team
Okay.
to target different SME segments more effectively.
Interesting.
So they're recognizing that not all SMEs are created equal.
Right.
And by understanding the specific needs of different types of small and medium businesses,
Right.
they can then offer more tailored solutions.
That's a smart move.
Yeah.
Recognizing that diversity within the SME landscape
Yeah,
can definitely give them an edge.
absolutely.
What specific initiatives are they using to reach these businesses?
So they're focusing on enhancing services that matter most to SMEs.
Okay.
They've improved their payment and collection services,
Mm-hmm.
knowing that smooth transaction banking is crucial for those businesses. And what's even more impressive is they've streamlined their loan approvals by using data-assisted credit rating profiles for their enterprise Easy Fund loans.
Interesting.
This means faster access to capital for SMEs,
Right.
which is a huge plus because
Yeah.
businesses often need that quick funding.
Absolutely. So it sounds like they're making it much easier for SMEs to do business with them.
Exactly.
Now let's shift gears a little bit and talk about their presence in mainland China,
Okay.
particularly BEA China.
Mm-hmm.
Their footprint there seems pretty significant.
It is. They've established a strong network with 30 branches and 32 sub-branches spanning a total of 38 cities
Wow.
across the mainland. That kind of reach is crucial
Yeah.
for capturing opportunities in such a vast market.
And I imagine their focus on the Greater Bay Area, or GBA,
Yes.
is a big part of their China strategy.
Absolutely.
Could you remind our listener what the GBA is and why it matters so much?
So the Greater Bay Area is a mega region in southern China, encompassing Hong Kong, Macau, and 9 cities in Guangdong province. It's being developed as a major economic hub, and BEA is right in the heart of it.
Right.
They have 20 outlets operating within the GBA,
Wow.
and they're actively looking to leverage this network
Yeah.
to capitalize on the area's growth potential.
That's a prime spot to be in.
Yeah.
What about their international presence outside of Hong Kong and the mainland?
Yeah, so the report doesn't go into too much detail.
Okay.
It groups their international Macau and Taiwan operations together.
Got it.
But it does highlight the steady financial results they've achieved despite the global economic headwinds,
Yeah.
which is commendable.
Steady is definitely good in these times.
Yeah.
Anything else noteworthy about their international segment?
Yeah, one thing that caught my eye was the launch of their BU Asia Impact Bond Fund in June 2023.
Okay.
This indicates their commitment to sustainable investing, which
Yeah.
is becoming increasingly important for investors globally.
Yeah, that's a good sign. It seems they're in tune with evolving investor preferences.
Mm-hmm.
Okay. We've covered a lot of ground with these business segments.
Yeah.
It's clear that BEA is taking this multi-pronged approach,
Mm-hmm.
adapting to challenges,
Yeah.
seeking opportunities in different areas.
Exactly. It's not just about being present in
Right.
these markets. It's about understanding their unique dynamics
Mm-hmm.
and tailoring strategies to thrive in each one.
Now let's dive into those numbers.
Okay.
I'm curious to see how these different segments translate into their overall financial performance.
Yeah, let's unpack those financials,
Yeah.
see what insights we can uncover. One figure that really jumps out at me is their pre-provision operating profit.
Okay.
They achieved HK $11,314 million in 2023,
Right.
which, to give you some context, that's a 29.6% increase compared to 2022.
A 29.6% jump.
Yeah, it's a significant leap.
That's massive. What fueled that impressive growth?
Well, this surge in operating profit really underscores the success of their strategies.
Right.
We talked about their revenue diversification,
Right.
expanding those cross-border businesses and becoming more operationally efficient.
Mm.
These efforts are clearly paying off.
So those strategic initiatives we talked about are translating into tangible financial gains.
Exactly.
That's great to see. But the report also mentioned challenges related to asset quality,
Yeah.
specifically those provisions they had to take. How did that impact their bottom line?
You're right. Provisions for potential loan losses can definitely eat into profits.
Right.
It's here that their focus on prudent asset management becomes really crucial.
Okay.
While they were proactive in working with clients to address those troubled loans,
Mm.
in the real estate sector, the industry-wide liquidity challenges did force them to set aside those additional provisions.
Right.
Their income statement shows impairment losses on financial instruments totaling HK $5,483 million for 2023.
That's a substantial figure. Though the report also mentioned that this was actually lower than the previous year.
Yes.
Is that a sign that they're getting a handle on this situation?
It's certainly a positive indicator.
Okay.
While the impairment losses are still significant, the fact that they managed to reduce them year on year
Right.
suggests they are actively managing those risks. They're not simply hoping for the best. They're taking concrete steps
Yeah,
to mitigate those potential losses.
that's reassuring to hear. Now let's talk about their investment in AFN Bank Berhad in Malaysia.
Okay.
The report mentioned they wrote down a portion of that investment.
Right.
Can you explain what that means and why they chose to do it?
Sure. A write-down essentially means they've reduced the value of their investment in AFN Bank on their books.
Okay.
This is often done when the performance of an investment doesn't meet expectations,
Right.
or when market conditions change.
Mhm.
In this case, it appears that BEA is taking a conservative approach to reflect the challenges that AFN Bank has been facing.
Oh, got it.
It's not necessarily a sign of panic,
Right.
but rather a prudent adjustment to reflect the current reality.
Okay, so it's more of a proactive measure than a red flag.
Exactly.
That makes sense.
Yeah.
Now let's move on to what matters most to investors.
Yes.
Shareholder value. What's BEA doing to keep their shareholders happy?
Absolutely. And BEA is quite vocal about their commitment to enhancing shareholder value.
Okay.
One of the key ways they do this is through dividends,
Right.
which are essentially a share of the company's profits that are distributed to shareholders.
Right.
For 2023, they declared a total dividend of HK $1.80 per share.
HK $1.80 per share.
That's quite generous.
It is.
What does that translate to in terms of dividend yield?
Based on the closing share price at the end of 2023.
Okay.
That represents a dividend yield of roughly 6.3%.
Okay.
This is significantly higher than what you would typically find
Right.
with other investment options, making BEA an attractive choice for income-focused investors. 6.3%. That's certainly enticing, especially in this economic climate.
It is.
But dividends aren't the only tool they're using, are they?
No, you're right. Share buybacks are another way that companies can return value to shareholders.
Right.
Essentially, they repurchase their own shares from the market, which reduces the number of outstanding shares
Right.
and can potentially boost earnings per share.
Okay.
The report provides details on their 2022 share buyback program, during which they repurchased a substantial 262 million shares.
262 million shares.
Yes.
That's a significant amount. What was the total cost of those repurchases?
The total consideration for those buybacks came to HK $3,038 million.
Wow.
This move demonstrates their commitment to returning value to shareholders and signals their confidence in the company's future.
Okay, so they're actively using both dividends and share buybacks
Yes.
to reward their investors.
Yeah.
That's a strong signal that they're focused on creating shareholder value. Now let's shift our attention to the future. What's BEA's outlook, and what challenges and opportunities do they anticipate on the horizon?
Yeah, it's a pretty unpredictable landscape right now.
Right.
So, they're not shying away from the headwinds. The report acknowledges rising U.S. interest rates and geopolitical tensions, both of which are impacting investor confidence globally.
Right.
These external factors,
Yeah.
they can make planning for the future a bit like trying to predict the weather.
It's true. Those global trends are tough to control.
Yeah.
But BEA must have some strategies for navigating these waters.
Yeah.
Did they highlight any potential growth areas?
They did. And this is where their strong presence in Hong Kong and the deep understanding of the mainland market come into play.
Right.
The report emphasizes Hong Kong's strategic position as a gateway for mainland companies expanding internationally. It's like a bridge between East and West.
Right.
And BEA is well positioned to facilitate that flow of capital.
Yeah.
And business activity.
So they're not just passively observing, they're actively positioning themselves
Exactly.
to benefit from this trend.
Yeah.
Are there any specific initiatives or trends driving this influx of mainland businesses into Hong Kong?
Absolutely. One key driver they highlight is Hong Kong's Top Talent Pass scheme, which was launched at the end of 2022.
Right.
This scheme is designed to attract skilled professionals from the mainland, and it's been very successful. BEA, with its seamless cross-boundary banking services, is perfectly placed to cater to the financial needs of these individuals and the companies they work for.
So it sounds like they're strategically aligning themselves with these emerging opportunities.
Yeah, they're being very proactive.
We've talked a lot about their digital transformation initiatives. How does that factor into their future plans?
Digital transformation is a cornerstone of their strategy. They're continuing to invest heavily in technology to enhance their services and streamline operations. A great example of this is the launch of their new mobile app, which offers an improved user experience and a wider range of features. They're clearly embracing the shift towards digital banking and aiming to stay ahead of the curve.
It seems like they're ticking all the boxes when it comes to adapting to the changing landscape.
They are.
But what about sustainability?
Yeah.
That's becoming a major focus for businesses and investors alike.
Absolutely.
How is BEA addressing this?
So sustainability is a key focus for them. And it's not just lip service. They're walking the walk. The report highlights their commitment to green finance and various sustainability initiatives. For example, they're making strides in measuring their financed emissions, which is crucial for understanding and reducing their environmental impact.
So they're taking a data-driven approach to
Exactly.
sustainability, not just making vague promises.
Yeah.
That's encouraging to hear.
Are there any specific products or services they're offering in this area?
Yeah, so they're actively expanding their green and sustainable finance or GSF products. This includes green loans, which provide financing for environmentally friendly projects, and sustainability-linked bonds, where the interest rates are tied to the company's performance on predetermined sustainability targets. These products are attracting investors who are looking to align their portfolios with their values and support a more sustainable future.
So they're providing concrete solutions, not just talking about the problem.
Exactly.
But even with the best technology and products, a company's only as good as its people. What's BEA's approach to talent acquisition and development?
They recognize that talent is crucial, and the report emphasizes their focus on attracting and retaining skilled employees. Particularly in those key digital and specialized areas we've talked about. They have various trainee programs to nurture talent from within.
And are actively participating in external initiatives to attract experienced professionals. So this commitment to building a strong talent pipeline is essential for their long-term success.
It sounds like they have a very well-rounded approach to navigating the future. So what does this all mean for you, our listener? What are the key takeaways you should consider after our deep dive into BEA's 2023 annual report?
Here's what stands out to me. BEA is demonstrating resilience and adaptability in a complex and ever-changing financial environment. They're not just reacting to challenges. They're proactively shaping their strategy to capitalize on emerging opportunities. Their diverse business segments focus on efficiency and digital transformation, and their commitment to sustainable finance all point towards a company that's looking ahead and preparing for the future.
They're not just riding the wave, they're actively steering the ship.
Exactly. They're taking charge of their destiny.
I like that.
But, as with any investment,
Right.
there are always factors to consider.
Of course.
Their success in certain mainland companies expanding into Hong Kong will be interesting to watch as economic integration in the GBA continues.
Right.
Will this be a major growth driver as they anticipate? And how will they balance their commitment to shareholder value with the need for continued investment in technology and talent?
Those are great questions to ponder. I think the Bank of East Asia is on the move. We'll be keeping a close eye on their journey. This deep dive has given you a solid foundation for understanding their current position and future prospects.
Absolutely.
Now it's up to you to decide what it all means for your investment decisions.
Exactly. Thanks for joining us.
See you next time.